ask the questions regarding the inducements of the liquidity concepts only. And there we go. So this depends, right? So what's a false breakout structure is to you? For me, that is just an inducement. I treat it as an inducement. You won't see me marking the false breaks on my charts, and that's how you use it, right? So when do we have an inducement? We have sort of false breakout structure. Similar case in there, we have this false breakout structure, but I don't really like to mark that much stuff on my chart. So false breakout structure, inviting your sellers, inducement, no clear intentions, build liquidity, induce again, and we go high. So, you know, if you're trading liquidity, you are using the false breakout structure. Doesn't matter if you mark it or you don't mark it, right? So this is an inducement as well as a false breakout structure inviting the SMC trades. Although this is all mitigated to this point, right, where we had that very minor reaction, then we just smoked that zone. So that is the answer of your question. Do you use a false breakout structure? Do you use them, bro? From where are you guys learning these stuff, the manipulation setups, right? I haven't like which inducement can. I don't know, bro. What a manipulation setup for me. For me, the main thing is that to get into a trade is that I get an inducement, and I don't know if you call that a manipulation. Then yes, I do trade those, right? Just keep it so simple, stupid. You don't need to overcomplicate those stuff. How to identify a major inducement? So, bro, you can understand now. First things first, right? I've said it like a lot of times that I don't categorize my inducements. So if that's a major, medium, or minor, I just work with it. So I don't really care if that's a major or anything. And how can you mark that? The major inducement simply, right? Most major inducements often happen when we take a high time from liquidity point, right? So if that's your, for me, right, I don't really call them major, medium, minor, but just to give you an idea, for me, if anything, any liquidity is above H1 and we induce that, that's what you can say that that's a major inducement. H1 to M15, that's pretty much your medium. And mine is going to be your intraday substructure inducements that price creates in the same day and then takes them out. So what do we have in this scenario is that structural point created in the same day, we induce that into the midpoint, mitigating this supply zone, and that's your minor inducement, right? So yeah, but you don't want to mark them as a minor or major. Just know that it's an inducement and work with it. Yes, we do have a really nice entry, but okay, I'm afraid right now if I'm going to talk about entries because I'm planning on something good, right? So I don't want to mix up the stuff. But yes, we do have we had the really nice entry, and I can just give you a hint. We had an entry in in these in these few candles. Which inducement can give you as a relevant? So good question, yeah. So that's kind of good question. Which inducement can view as a relevant? So one thing that I don't know if you have seen those lit videos, they do take them in account. But for me, if an inducement is happening in the trend direction, that's what I consider more relevant rather than any inducement happening against the trend. So if that's the inducement is happening against the trend, right, I need way more price development to mark that as a valid reversal, right? So the inducements happening in line with the trend, that's more relevant to me and I'm more comfortable trading them. And the inducements against the trend are most likely to give you the complex pullback or the minor pullback to mitigate something and continue in the trend direction. Relevant liquidity. Okay, if Sango can explain this one, that is going to be really good, the relevant liquidity, because he's good with that stuff, right? Can you hear me, bro? Okay, we can't hear you. Just okay, let me just start him.
Market is liquidity. Everything you see here is liquidity, because what is liquidity? It's just orders in the market. So buy, stop. Guys, can you please mute yourself? I don't know with OD or whatever, but everyone, can you please mute yourself if you're not talking? Thank you. So basically, everything is liquidity in the market. So any pending orders can be buy, stop, sell, stop, buy limits, sell limit, stop losses. Everything is liquidity. So what we are doing at liquidity trading, we are identifying manipulation. So big players getting involved in the markets. Okay, they take relevant liquidity and create on the opposite side a relevant liquidity to be taken. Okay, because everything happened for a reason in the market. When you have a manipulation, you have a target liquidity. When this liquidity is taken, this is the relevant liquidity, right? Because that's the liquidity the big players are actually targeting. Okay, so that's the difference between liquidity and relevant liquidity, because everything is liquidity in the market. Okay, and you have different we talk about IPA, we talk about equal highs, we talk about session liquidity, we talk about previous days and highs and lows. Those are relevant liquidities, right? I hope that responds to that question.
And you can simplify the relevant liquidity is that when you understand the price is inviting other traders to take the positions. That's the simplest way you can understand relevant liquidity, right? Because if no one is entering there, that's not going to be relevant.
Yes, there is a footprint in the market when trader enter. If you have followed the courses that we said, I don't want to mention the name, whatever. The first chapters are all about relevant liquidity, how liquidity has been engineered using structure in the market or structure cycle.
Yep.
Okay, and I've seen so many people in the chat skipping those. I'm telling you, you are setting yourself for failure, 100%.
Yes.
The base of a foundation is liquidity, and you're skipping the foundation of that strategy.
And also structure plays an important role, so understand structure real carefully, right?
Yeah, they're all structure-based strategy.
Yep.
So the traders that generate liquidity are all structure-based strategy. Breakout trader, break and retest trader, trendline trader, SMC trader, even the indicator trader.
Yep.
They use some sort of structure.
Yeah,
and then
in a way, maybe they call it high or high low or anything, but they use structure.
Yeah, they use structure. So as big players knows that, and they have an edge that you don't have. They have the order book. They know exactly where orders are placed. Okay, even if you use a tool on TradingView, you don't have the order book. That's just fake information, and it's just related to one broker, not the real market, right? It can help, but it's not accurate. And therefore, you need to analyze that footprint. Okay, where are the markets, guys? If your mic, if you simply move your mic, they're gonna kick you out of the call. Okay, thanks. So, thank you. So you need to analyze the footprints left by the liquidity, and that's where you will spot the relevant liquidity. And like, if I give you an example that of gold just in front of me, so Friday, you can see the market like tapping in previous, I think it was weekly low or daily low, whatever. And no, just Friday. You can see, yeah, you can see the first tap, and you can see the reaction for the previous daily low. Yep. That tells you there is liquidity there. Okay, because you can see the reaction. That's people, I mean, retail traders or any traders, or maybe sometimes institution traders that try to buy from those levels, right? So there is liquidity there, and then there is the manipulation. We take out the liquidity, and look how this reacted. Because when we take that relevant liquidity, we have this created target liquidity. This manipulation didn't happen for no reason. Do you think those gonna just take those orders and then like let the market goes in whatever the level that you want to go? No, they have a target. Okay, like if you enter and trade with a TP, you don't know how to trade. That's basically it. You're just gambling because you don't know. I mean, you have no expectation, no a set. It's weird to me. You need to focus on this first.
Yep, and let me give you a minor hint, or you can say that tip, to understand if the structure point you're marking is a good or no. So if you see a structure point and it gets respected at least once, then you can understand that there are traders entering and there is going to be liquidity above that, right? I won't go in deep in this one, but understand this one. You have this chart, and I can show you like tens of examples right now from this picture only. So just understand this. But then same thing, we react to that point, give them false reaction, let them enter more positions, and then we take them out with the speed and momentum. I think he can share his screen.
I can show.
Yeah, if you want, right?
I was in GU, I think, on Friday. But I deleted my chart, so
yeah, no worries. Share your screen, right?
Okay, let me open TradingView.
Yep. We're gonna keep this Q&A short, right? Because I'll be backtesting for like few days price section, and then we're gonna end the session as well, right? No, do you mark out your high time for market structure like protected highs and lows? No, just a normal market structure. Nothing crazy on high time frame, right? The real thing is that you understand what's happening on the lower time frame, and it gets aligned with the high time frame, right? High time frame is always going to be less noisy. You want to keep it less noisy because you don't want to make it over complicated, and then you're gonna zoom in on intraday time frames like M1 or M5, and it's gonna get more complicated, right? So no, not that way.
Yeah, can you see my screen, guys?
Yes, we can.
I'm gonna go quick with this one. So basically on Friday, I wasn't meant to trade at all. But when I came on charts, this is the 4 hours. I tried to keep high time frame really, really simple. I'm looking like I have a glance on the left. I understand. I have a reaction from this point here. Nice. We go lower. We came back. This was the relevant liquidity for me after we induced this structure leg. I check on the 4 hours. What did I see? Some liquidity sweep. Is this going to create a equal highs? Maybe. But for this to be relevant as an equal highs, I need to have liquidity to be taken on the opposite side, right? I can see directly this structural point. Boom. That sounds nice, beautiful. And I have some IP level as well in this section. That's it. That's basically it. That's my high time frame analysis. Then I go on the 5 minute. 5 minute is really simple. What I do understand is we have been trading bearish for a long time. Let's go on a 50 minutes for you guys to understand better. Okay, boom, boom. We're going lower. Bam, nice, 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 nice. And that's sit. Boom. Okay, cool. So we are trading bearish. We took relevant liquidity. So potentially we'll be trading on the opposite side. There might be enough liquidity being taken and build on the opposite side. Okay, this is sell side liquidity. This is huge. And if you are a big fan of channel, just take this line. Sorry. And you have a beautiful channel, we induce lower, blah, blah, blah. So if you look at the lit or whatever the course that you have been involved to, that's basically the theory in a nutshell, right? So as I said, I mentioned previous daily low, previous blah, blah, blah. So basically after that I got my high time frame analysis, I have some structural expectation, which is this was a relevant liquidity. So potentially we're going to reverse and trade higher, right? Okay, cool. So on the current day, what I need to find indication that you might trade long, right? Because if you don't have any indication on the current day, then your higher time frame analysis won't make sense, okay? So what do we have? Same here. We have previous daily low, which is quite of a nice key level liquidity, and then we have a reaction from it, which give a bit more of relevance. And therefore, if we reverse from here, because based on this reaction in here, I can expect Asian high to be taken, which create this as a trap, right? Cool. Let's say you miss this entry, because this entry is quite advanced, right? Is really advanced and is Frankfurt. Let's say you miss it. Cool. So that was my first one in here. I didn't take that on my main account. So it was just to have some fun. The reason is because I was doing some work with Spanky on content. Well, anyway, let's say you miss that entry. You only trade London. You don't have to be you don't have to be 24/7 on chart, right? You wait for this to tap into the trap. You wait for some reaction, something that you like on the on a 5 minute. Boom. What did I see on a 5 minute? Dice. I see the reaction. If I look at the chart, what I see on a 5 minute, we are trading higher. We're testing and rebalancing every fucking time, and we came back to. Can you see my screen?
Yes, we can.
Okay, perfect. And boom, you have this. Okay, we retest it. This is, I don't want to enter into too deep in a technical in this one, but then you have these 5 minute legs. We came back and I see this with an imbalance. We just, oh wait, that's not the right color. And we cover the imbalance as well. Boom. Okay, nice. We have a nice rejection from this part here, potentially an entry from here. Okay, and then you let price play, bam, 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 and you take your entry, and the market give you some nice reaction, and that's about it. I don't want to go on a 1 minute to show you entries because that's not the point of this call. The point of this call is just how you can use relevant liquidity to find a proper entry in the market and use structure in your advantage. That's what it is. You know, and if you can do that, if you can do what I just did by within the first 5 minutes of looking a chart, then don't even focus on the entries. Don't even focus on entry and all the kind of stuff because you're not ready at all. So that's about it, guys.
Okay, so how can you identify which POI is going to hold? Understand one thing, you're not trading POIs, right? You're trading liquidity, and POIs comes later, right? Let me share my screen. All right, good. Can you guys see my screen now? So just cut it from here. So how can you identify which POI is going to hold if priced from many potential POIs? Again, you're not going to, you're not trading the smart money order flow, you're not trading the POI mitigations, right? What you are trading is liquidity, and your first thing should be understand liquidity, just as stated above and here, and then comes the inducement, and then comes the POIs, right? So doesn't matter if after inducing this low we did mitigate something to the left or no, right? What is important that you understand, if price is leaving a potential zone after this inducement to get, for you to get into a trade, and those are the POIs that you want to trade. You don't really care if like this is a valid, sorry, this inducement is mitigating something in here or no, right? This is really bad thing, because if you understand liquidity as a thing that you are trading from POIs to POIs, and you're not really trading liquidity, you're just trading the basic smart money concepts, right? Okay, good. So other question? Missed entries, right? Again, if everything is super good with your analysis, then yep, entries for sure you want to work on them. Try to have multiple entry models, so you just don't want to miss those entries, right? If you miss an entry, just go back to the idea, understand why you missed that, and if you're following a particular entry model, could you have get into the trade, and that's how you improve your entries. Does I have seen guys entering of fair value gaps after an inducement as well, because sometimes they say that they miss because of that extreme limits. That's completely fine if it's working for them, right? So you need to find that sweet spot that's working for you. You stick with lit cycle, right? So liquidity cycle, not every liquidity cycle is meant to be traded, right? So if again I show you geo example, I don't know, like some guys are going to consider this as a channel build up, inducement of this one, and then they try to look for sales and then ended up getting a stop loss. So this is not a valid liquidity cycle, right? And yeah, so not every liquidity cycle is meant to be traded, but yes, we do trade liquidity cycles. And understand one thing, liquidity cycles don't only happen in form of these channel buildups or trend line buildups. It happens, with every form of liquidity. So that could be a structure point, that could be any sort of valid liquidity. How can we avoid the self-doubt? Self-doubt, right? Cool. So backtest won't help you remove your self-doubts, right? Live test will, and in live test you need to like obviously deposit some sort of money. I won't say that you need to deposit $1,000 or two. You need to deposit $100 and trade it with 0.01 lots till you are really confident with your trades, right? Once you get to that point, then you can obviously risk 1% or even 2% or 3%, which I particularly do sometimes. Obviously that's not recommended, but yeah, if you know your starts, you can do that. Risk management, okay, risk management isn't something too complicated that we should be talking about, right? It should be a decent system of your risk management, right, that you follow depending on the types of the trades, the types of the setups, and the type and the amount that you're willing to lose. And the first thing obviously is to protect your capital, right? So if you can't bear to lose $100, then you don't want to go with the position that you're risking, right? So then go ahead and risk 10%. And obviously the methodology that we trade liquidity, right? If you get a precise entry, then you can pretty much put break even like after 3 or 4 candles, right? Getting a good reaction, and which is really strong point of this methodology. And again, this comes in the risk management system. So you get a precise entry, you have a very high chance of getting a nice little risk-free trade, and from there you are completely risk-free. And vendetta has seen me trade live, so I don't really wait for the break of structures to put break even, all those stuff. I just wait for 2 or 3 candle reactions. If I see that, all right, this is pretty good, I just put break even, right? So, and risk management should be, like you have a B category trade, C category trade, reversals, pullback. It should be that way, right? So you risk certain amount on these types of trades, certain amount of those types of trades. All right, so yep. So when a move has started, like in this scenario, and if you miss the entry, right, this doesn't mean that you miss the whole move, right? You have all that price section that you are going to analyze, right? And that's when, now, for me, what I do is I just wait for a start point and then I completely trade M1, right? So I don't look at M5 or those stuff that much. And then on M1, I try to look for those cycles that are going to help me in get in the positions, right? So if I go on M1, so we do have efficiency, we have the false reaction, inducement, we have a nice little entry criteria, which I have taught in few of my videos. That's where you get an entry, right? Again, do I see any valid entry? No. We do have inducement. Again, same entry model that I have talked previously, a valid entry, right? We have the break, we have this, we have the false shift, we have this cycle coming up, and literally the same entry model again that I have talked in my video. So all these are continuational trades, right? And the difference is that these are not order flow trades. These are the trades after we get that inducement, right? So you don't want to get into the order flow trades. So if you're getting the order flow trades like this, pretty much get an entry at this mitigation point in an order flow, then there's a high chance either that's going to, be a loss or a break even trade. Why? Because there was no real intention, there was no inducement. And once that inducement is done, you can see the move sharp move away. So look at this move and then look at this move. So there's a big difference. Not really, right? So again, it's all personal preference, right? If you prefer a zone with an imbalance, that's good. If you don't prefer a zone, uh, that's also good, right? For me, imbalance is sort of an attraction point. So price needs to fill those. So if a POI is having that, then for me, that's a bit high probability POI, right? But again, I'm not talking about the POIs that I'm going to drag from in here. I'm talking about the POIs that will be forming after an inducement. Journaling columns. So, the journaling column should have two important things, right? The things that you have done correct, the things that you could have improved, and how you are going to improve. So, these 3 columns are must in every single trading journal, right? What else do we have? So, the difference between a medium inducement that will have a sharp reaction and a minor inducement that may be a fake out, right? So both inducements. So in a particular scenario, depending on the scenario, right? Both is going to have a different purpose. So let's say that we take a sort of medium inducement to the low side, right? So we are coming something like this. And then we have this minor inducement. So this minor inducement had the purpose that as a reaction of this liquidity being taken, price is going to go back and mitigate the valid possible zone to continue higher, right? So depending on the context, the meaning of the inducement, it changes, right? So medium inducement leads to a reversal. In this particular scenario, we had the minor inducement that may lead the price to, undergo a pullback, mitigate something valid, or not always it's going to be a mitigation, but sometimes it is going to be an inducement as well. So induce and then continue in the trend direction, right? So the meaning changes, right? Depending on the context. Is journaling important? Do you do it? Yes, I do have a journal. I have used Threadzilla as well. So I still use Threadzilla, right? But you don't need Threadzilla right now. You can just have a simple Notion journal, or you can have a hard copy journal as well. And it is important, right? Because if you don't have the data set that the trades that you are taking, why you are taking those trades, what you would have improved in those trades, so then there's no meaning, or there's not a slightest chance you are going to improve, right? Well, I did put, oh, all right, so right now I don't put that much details, but when I started, I used to put a lot of details, right? And you should do that. So now I just mark the playbook that I'm playing with my entry models, uh, my performance, and what I could improve in that particular trade. I do that still, right? Know that, but for you need to put a lot of details in your journal. And if I can show you my journal, just give me a second, right? Let me get an empty template. All right, so this one. This depends from person to person, right? If someone has the capability to do things really fast, he's going to understand it much faster, right? And if someone isn't that, can't focus much, or has some sort of, other issues, then it's going to be very long duration for him to grasp the concepts, right? Again, it depends from person to person. But if you focus, lock in, I would say 3 to 6 months, you're going to get a really good understanding of the markets. And then pretty much 6 months of live testing. I don't care like how much you backtest. Yes, backtest is good. It is going to get you familiar with the certain concepts like the patterns, or what you want to wait for on live markets. But live test is what going to make you, right? So 6 months of live market is all you need, right? All right, good. So funding platforms. I'm not a big fan of the funding platforms. Yes, I do have account with few of the firms. I don't really trade those accounts very seriously, right? I have my own personal account which I trade, and that's the account on which I make the money, right? For me, just the platforms are like, okay, I pass it, so now let's just aim for a bigger payout, right? A bigger percentage, and that's it. If I lose the account, I don't really care, right? Because I'm not trading that. For me, the platforms are like sort of gambles right now, right? But at the start, I started the platform, so at start it is really really good way to make good capital to trade, right? All right, good. So right now I'm like on my biggest gain percentage in this year so far. I'm up like 71% in this month of August, right? No. So if you like to keep yourself, you can say that a target, give yourself a target, and if you are quite far from that target, you are going to take silly trades that is going to make you lose a lot. Trust me, when I say a lot, I used to have a target. Let's say I want to make a 5% a week, and if I'm like 2% in there, I try to take ugliest trades that that a human can ever take, and go to a worse win rate, losing streaks, all those stuff. So yeah, looking yourself, on a certain amount that you want to make, this much amount, no matter what, is going to lead to very bad trades. And you don't even know that either market is going to give you the opportunities that you want to take, right? So if there's no opportunities, what's going to, happen with your goal? So yeah, that's a big no for me. The risk 1%. All right. So depending on the setups, right? So my risk could be between 0.3 to 5%. And when I'm quite up in the percentage, and that's like the best setup I can see across multiple pairs, that's only way I'm gonna risk 1%, right? But 0.3 to 0.5% is my go-to risk, depending on the setup as well. Okay, how many pairs do I trade again? There we go. I do have main pairs, which is EU, GU, gold, and Nasdaq. I'm trying futures right now, right? Not, I'm not really good with futures, so I won't say that. And then the other pairs, that's UJ. I've been trying to test this pair, and this looks really clean to me to trade. So I'm testing UJ. I trade this one as well. Sorry, EJ. I trade USDJPY as well sometimes. So when I don't find a clean setup on my main, I look on the others, right? Okay, so I know a lot of guys that use the entry helper, and they are really good with it. Really good, right? But I don't use the entry helper, right? I do use liquidity cycle, not the exact way that's taught in the lit, because what I've understood in the lit is that blah blah blah. Every lit cycle is going to give you some sort of stuff, right? But yeah, for me that's not the way it works. So I did that to my own liking, and that's how I use the liquidity cycle. Why is everyone going to future? I don't know, bro. I just looked at few guys and they recommended me trading futures, so I'm trying futures, right? Bro, I didn't say performance is a gamble, right? I said that for me right now, it's just a gamble because that's not my main focus. My main focus is my personal account, right? And if I do have such accounts and perform, I pass the account, I get a small payout to get the refund back and make like 2 or 3%, and then I just risk a big amount to just get a good payout, and then that's fucked up. That's kind of personal question, so I'm gonna skip that one. But it's a really good account. Okay, just from private mentors, I won't lie. I didn't watch those. A lot of guys, message me that did you learn those concepts from the Elgo Hub, or I don't know, the guy named Yusuf. I didn't, right? I learned that from a private mentor, right? Bro, I started late when I think Road wasn't in the that, right? So I had a really okay, not that rough, but I had the journey of hopping from one mentor to other. And the concept wasn't like far different from each other, but still, I had like quite few mentors from I learned, and then I tried to create my own trading system. None of the concepts that I use, I created them, right? I just use the stuff that being taught to me in my own way, right? Like just a personal touch. All right, good. Again, how this one is good, right? Because I want to talk about this one. I'm going to give you a hint, right? Understand structure. And if you can understand structure, you can understand liquidity clearly. And if you can do that on a certain pair, that then that pair is really good to trade. But if you can't do that, then that pair is going to be trash, and you want to move to the next pair, right? Yes, I'll backtest. I'll backtest. Okay. Criteria to identify trap. It's going to be a quite long session if I dig into those. So let's keep them for another session, right? But still nothing major, right? It's quite easy to understand traps. I don't know why people just make it difficult, but yeah, understand where others are entering and you're gonna see the traps yourself. Yeah, exactly. I don't know why, right? The thing that you should be concerned about, either you are learning from them for free, or they are providing you help in any sort of way, right? You should be concerned about the stats, not about the amount they trade, right? And I think I have showed my stats a couple of times in the server on my Instagram stories as well. So yeah, that's what you should be concerned about, bro. By the way, I
I'm
was
tell you one thing.
yeah.
I'm tell you one thing. Sometimes Spanking send me is profit. The only reason he doesn't send that in the big groups is because he want to keep this group kind of serious and humble. There's no point of flashing a 15K one trade payouts. How these things gonna help you, like in any shape or form?
Yeah,
The only thing we create is just FOMO. We have seen that in different groups. That's why we
yeah,
we kind of forbid that in this group. And I think everyone benefit from this because it creates an atmosphere when everyone can share without being judged, etc. And I think showing off profits is stupid if you don't show off losses. Then
yep,
you know.
exactly. That's why I prefer to show my win rate, my starts, the trades that I take, etc. Right? That's what you guys can like set a goal that you want to achieve certain starts, right? But not the certain amount that you're gonna make like 20K a trade a
Yeah,
day
not
after
like
learning
this.
those stuff. Yeah,
Yeah, not like Ream. If you look at Ream chart, Ream backtest, Ream, there is only win. There is no
those.
losses.
Yeah, exactly.
No losses. But this guy still making a new course every 2 weeks to try to sell you the same solution with some fancy word. And I mean, that's exactly why we don't
Yeah,
showcase profit, because it makes no sense to me.
yeah. All right. So if you are doing quite good on the live markets, right? So live market means you have like 3 months of minimum data that tells you you're profitable, right? That's when you want to take a challenge or deposit a small amount in your live account and trade it, right? Other than that, it's all crap. It's just bullshit. Okay. Okay. So the pairs, right? So you should trade the amount of pairs that are not less to force you take trades, but enough so that you don't miss out the trades, right? So if you monitor multiple pairs, right, you have 3 or 4 setups occurring on the pairs simultaneously, there's a high chance you're going to skip all of them. And if you trade only one pair and there's no real setup, you're going to force a trade, right? So you should have something in between. All right, good. Yep. So I was a guy. This one is quite interesting as well. Cool. So I was a guy with a crazy RR, but a very ugly win rate, right? Win rate was around 30 or below 30, but the RR was crazy, right? And that wasn't something very good for my mental health, my mental capacity, and my trading portfolio, right? So then I just, sacrifice those big risk rewards to get the accuracy now that is between 70 to 80%, and right now it's at 77% for this month. So I prefer a high win rate with a consistent risk to reward. So for me, anything above 5R is crazy, and I'm going to take that. Anything below 5R is something I'm going to skip, right? Well, yes, we will backtest. Oh, well, well, okay. I think that was on G. I'm going to show you only one trade, right? That I'm planning to create a breakdown as well. Where the fuck was that trade? What's that this week? Yeah, somewhere in here. Yep. There we go. So this week on Tuesday, I took a 17-hour trade on GU. Entry was somewhere around there with this much of a stop loss. Okay, sorry. Not in here. Somewhere in this week with something like this. And I had like a 17-hour trade. So this is a trade that I took. That I took on GU this week, right? Yeah, this was kind of before London, and then when London opened, the price action was shit. So I was quite happy. I got a good move before London opened. I usually don't trade Frankfurt, but I'm kind of liking the Frankfurt. So you can get a nice 5 or minimum trade, and then you can just do whatever you want for the whole day. Yeah. All right, F post. Okay, is that an F post? Okay. I just entered after this inducement, so I don't know if you want to call that an F post, but yeah, I entered off this inducement. Oh, can you please mute your mic? Okay. Trade only on time. Yeah. Now, timing is the last thing that you want to focus on. But why I focus on timing is that so I don't, stay, on the charts for the whole day. That's why I have those timing. That's on it, right? But yeah, you can enter out of the timing as well. Like this, I missed this. You can say that sell opportunity because I wasn't trading. I won't say that that was a miss, but that was not following my plan. And I think I shared this with Vendetta that I was looking for a sell after this one, and I was like, "Fuck it, who's going to wait?" And I just closed my charts, and you can just see this the other way, right? So there we go. That's when I shared. I hope so you guys can see my screen. So that's when I shared that I was looking for a sell opportunity, right? And say that you look at my charts, you won't see any sort of graph, right? I do have one line, two line, and the third line that I was interested in taking a position. That's it. That's all you want. No crap, right? And I just closed my charts because I wasn't feeling like I wanted to trade. Well, yeah. I help casinos make money, so you can understand that. Well, yes. So you're gonna stick to those pairs that are going to move, uh, good in your timings, right? Like you can trade Asia session. There's no harm in trading Asia session. It's really good session, right? And you can trade that. So you can trade Asia session. You can trade the late New York session. I think they call it New York PM session, and it's really good. The indices they move really good in the New York PM session. So sorry. So if I'm gonna do this, I'm gonna have that indicator where that is. Okay, do I have it? No. So that's some sort of build on indicator. There we go. So you can see that the indices they move quite good in the AM PM session, so you can have good trading opportunities. So again, depending on the pairs that you trade, you can trade anytime, bro. Doesn't matter.